Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, October the 16th, the year 2018. Let's talk trading. Do you want to keep that indicator on your chart? One of the hot topics or fads for about the past couple of years has been minimalism, decluttering, mindfulness. In fact, it was funny. I subscribed to a couple of those minimalist email blasts because sometimes I find them humorous. And anybody who knows me knows I've got a lot of stuff. I'm anything but a minimalist. But the point is that they will actually sell you things to help you become a minimalist. I mean, when you think of the absurdity of, okay, I want to have less stuff, but I got to get something else so I can have less stuff. I mean, it's just crazy. On the other hand, there's plenty of companies and organizations and people that will help you organize all your stuff. They'll sell you shelves and bins and labels, etc., so you can organize all your stuff. So on the one camp, minimalist side, they're saying just get rid of it. And then you got this other side that says, no, let's organize it. But what's that got to do with trading? Well, a lot. Because you might have things on your chart that you no longer use. So why do you have them there? So as I go through my charts, let's just see if there's anything I don't need. One thing we all need to do and have is our money and risk management plan. And if you have any indicators that do that, have them in place so you can use them each and every trade. So we look here at the Euro Yen monthly chart. You can see we're 74 pips off the bottom, so I think it's going back up. It's because you can see here the day and the week are green. So I've got a few indicators on this chart. I've got the magnified market price here. I've got the TRO time. So when I make videos or post charts, everybody can see exactly, what the time was when I did it. So they can get rid of the hindsight. I've got the B clock down here because it's just depending on where my eyes are on the chart. I just like to have things like the price. And once again, I've got the same information here and here, knowing when the bar is going to end. So like if I'm really like focusing here, it's easier for me to look here than it is to like look way over there. Even though I'm on a laptop, but I mean, just think if I had the 24-inch monitor, um, you know, making my eyes travel that far. And like I said, magnified market price that I've modified to add in. I want to know where price is in relation to the open, the current high, and the current daily low. Or in this case, this is monthly. So monthly high, monthly, current low. The mid dots. I have the previous mid dot on there because that gives me a bias and a crossover point. So like you can see right here, it touched it and reversed. Here it went right through it. Pretty much a touch and reverse. You can see how when price crosses that midpoint or gets to it, how it likes to clear it. One way, the other way, or both ways. You can see when price opens above the mid dot, it usually likes to go up. And when it opens below the mid dot, it usually likes to go down. Let's see here. So you can see there's always some pips to be made using that as a bias. And the HL5 indicator showing the high, close, mid, open, low of the previous candle, and it's giving me distances from these lines. So yes, I like that indicator. And the buttons in case I want to change time frame or chart pair. So there's really nothing to clean up on this chart. And for the weekly, once again, you can see here the weekly is up. We've exited out of the lower previous week's wick zone. A little tongue twister there. Now, yesterday, I think I gave you the heads up. There were a bunch. We still had, or maybe not a bunch, let's call it a handful of gaps that hadn't filled, and I gave you the heads up. If you didn't take advantage of them, don't blame me. Don't say I didn't tell you, because I told you. See, we've got one left right here, the new beast, pound New Zealand. Okay, so now I've got the candle colors here, so I can see right now, I can see that the week is up and the daily's up, but H4 through H15 are down, and see, the last three 15-minute bars were down, the last 2 days were up, the current week is up. So having this, and I can use these buttons to change time frames. So it's handy. Now here on the weekly, I have this dashboard and I have the spread because when the week first opens and we're trading those gaps, I don't want to pay a huge premium. So I kind of sometimes wait for the spreads to settle down. And then this tells me the distance between the close and the open for the week. And this lets me know if price is in the wick zone on the daily or weekly. And if the previous week was an inside bar, because sometimes you can take advantage of those breakouts on the, well, you can always take advantage of the breakouts, but the inside bars sometimes pay off a lot bigger. On the daily, pretty much the same indicators as the chart below. We just have a different time frame. See 89 pips range there. We use the range once again, that what I call the price GPS, close to open, close to high, close to low, so you know where price is in relation. The fib retrace, that can show you if price is breaking out, or just let you know where price is within the previous, or actually this is in the current day, where that retrace is. And high, open, open, low just shows you the maximum you could have pulled out of a trade. So for example here, there was no open low, but there was a chance to make 89 pips high to open. And you see right now, we're at about 50 some pips, 40 pips right there. So there was a lot to be made. Once again, don't need to get rid of anything. On here, as you can see, it's pretty much standard setup, but this is the buy zone using the HL5. You got the template name, so I know which template it is, because sometimes traders say, hey, I want that template. So well, which template? Tell me which template. That's the template name right there. Basically, it's just a modified version of the My Notes indicator that I use. It just puts out that one little line there. The dashboard here. Okay, we had the breakout bars right here. Want to see if there's any breakouts. Once again, close the open. So you can see here we've got some within the buy zone in case I want to switch over to buy zone trades, and just having the price on all the pairs, because you can see if you have the double, triple O's, like right there on pound New Zealand. And buy zone, once again, you got your trigger here. You see the pivot was really close to the open. In fact, it was between the buy zone and the open, so really can't play that bias too much, but just taking that buy zone trade, and if you let it ride, or if you had, let it ride, that would have been a very nice trade. And here on the rat zone, once again, this is pretty standard. I got the drain the banks tag there. That was when I was posting charts just to rattle a few people's cages. For some reason, they just got all bent out of shape. Oh, you're branding. Oh, you're advertising. It's just like it's a rallying cry. Jeez, drain the banks, I guess they got mad because I was selling Drain the Banks t-shirts. And let's see. Like I said, the rat zone pretty much puts up all of these for you, so you don't need to add a bunch of indicators. Pretty much all in one. And as you can see, we had a red rat reversal here. Nice trade out of the red rat zone. Once again, showing that we took out that pivot. Now remember, when we started this week, I gave you this number on the weekly pivot. And that was worth about, well, let's see, from the weekly open to the weekly pivot, that's about 65 pips. Whether or not you took that trade, that was up to you. But don't say I didn't give you the heads up. And you see we had a missed pivot yesterday, and I said look to see that pivot to get taken out, and once again it got taken out. Now, I told you in advance, so this is not Harry hindsight. That was Larry live trading, okay? So, if you didn't take that trade, don't blame me. I can't come through the screen and click the mouse for you. I alert you to these trades ahead of time. Whether or not you take them, that's on you. But don't say I didn't tell you. Now, price action, once again, it's the same as it always is. One ball at the top, red at the line short. One ball at the bottom, green at the line long. All right, see here, you would have had a green at the line, it pulled back. That would have been a scratch or maybe a stop out. But then you could have made it back and then some. Right here, 3-ball, red at the line. Same thing over and over. Okay, indicators. Is there anything I don't need on here? Well, maybe, possibly. Because we're just trading, do I really need to have the multimeter here? Probably not. But yeah, the semaphores, that's what we're trading off of. The buttons, well, yes and no. Multimeter candle color, we talked about. The sweet spot gold places the line, so we need that template name. The training wheels, price action, just, if you don't need it, then you can take that off. And the spread dots to give me what's selling, and looking at the spread dots, is it necessary? No, it just helps with timing, so possibly yes. Once again, horizontal lines, that's the trade we take. You don't have to know all this information, so you can reduce or remove the dashboard here. But if you want to flip-flop between different pairs, it's handy. I show it for informational purposes. Wick zone, that's pretty much it right here. You got the template name in the wick zone, all-in-one indicator, has your risk percentages, and once again, price doesn't like staying in the wick zone. Holo, nice holo trade there. You got an opportunity to jump back in there. Once again, that's pretty much the only indicator here. Now I'm going to blast through these last couple. Inventory reduction bars. That's it. If that's the trade you want, you need the indicator. If you're trading these horizontal lines, you need the indicator. Tick chart, if you're not trading tick charts, you don't need it. Einstein lines, if you don't like trading Einstein lines, then you don't need that one either. So, remember, It's not the indicators on your chart. It's not what you trade, it's how you trade it. So let's go out there and drain the banks.